Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, perhaps we should start with a photo of a big pair of bloomers, because everyone was talking about how one needed one's big girl panties on last week. It was a very, very difficult week for the markets, but you've actually got a very apt photo there on your slides.
Yes, well, if you can see that picture on the screen at the moment, that's kind of how I felt in the last week. And that's a picture of me doing the Graskop gorge swing about 3 or 4 years ago. The most terrifying thing I've ever done.
Except for maybe last week.
And the last week in the markets kind of felt a little bit like what I look in that slide. A bit terrified.
Sleepless nights.
Yeah, a couple of sleepless nights, particularly because that option structure that we've done has been flirting with our danger zone. And we'll talk about that during the show today. But it has certainly been worrying me, given the extent of the fall that we've seen. But at the same time, as much as it's being terrifying, I've also got hopefully a sanity check on where we stand in the market at the moment. And we'll look at that when we look at the chart of the top 40 as well, to show that we seem to be holding some fairly important support on our market right now.
Well, let's start off with maybe the trade that you entered very recently, and that was a long on Life Healthcare. And I imagine that probably went sour as quickly as the market went south.
Yes, unfortunately it did. And the thing is, Life Healthcare has been one of those strong stocks. It's had a lot of inherent underlying strength. And that's what we've tried to stick to with the portfolio recently. We've tried to stick to stocks that are showing good relative strength, that are performing better than the overall market. And certainly Life Healthcare has definitely been one of those shares. And for that reason, last week, we actually went along and we bought some Life Healthcare for the portfolio. So if you have a look, what I've got on the screen there is the chart of Life Healthcare. You can see that well-defined upward trend, which goes back to the beginning of 2014. And it tested that uptrend support, and it reversed up off that level. And I decided then to buy for our portfolio at 44 Rand. I bought 3,450 CFDs with a stop loss at 43 Rand. Now, it actually looked good to begin with. It rallied. It was looking fantastic when we
In fact, we were in the money, I think, last week, weren't we?
We were well in the money. Yeah, we were well in the money with it. And it was looking fantastic. But unfortunately, given the sharp drop that we've seen in the market over the last week, this share did not escape the carnage in the market. And as a result, you can see it's actually dropped below that uptrend line, and it's dropped below our stop loss as well. So I stopped this trade out at 42 Rand 98, just below our actual stop loss level that we had in mind. And unfortunately, that incurred for us a loss of 4,140 Rand after costs. Now, you'll remember we only took a risk of 1% of our capital on this trade, which is what we've lost, plus some transaction costs. So it's certainly not the end of the world, but it is a little bit disappointing, and it adds to what has been an otherwise very disappointing week.
Well, let's have a look at maybe the top 40 to give us a sense of perspective of what happened. I mean, it was extraordinary, and we haven't had those kind of swings or that kind of volatility for ages now, have we?
Yeah, we haven't had a pullback of this magnitude since August of 2011. So it's been about 3 years since we've seen a market pullback like this. Our JSE top 40's pulled back 12% from the recent high to the recent low that we've seen over the last couple of days. And that's all happened in a very, very short space of time. It's happened over 15 trading days. And also, to put that into context, it's actually wiped out the entire, or virtually the entire gains for the year on the JSE in 15 days. So it's been quite a significant sell-off. But let's just try and put a little bit of sanity into the picture here, because obviously emotions are running high. There is the tendency to want to panic. And there certainly are elements of panic that we've seen in the market recently. We've seen volatility spiking. We've seen the average true range spiking, which is a big sign of capitulation to a certain extent, and high volatility. We've also seen fairly high volume trading in our market. So those are all things that give me the sense that we're probably reaching some sort of a panic, which probably also indicates that we're near some sort of a short-term bottom. Now, this chart that I've shown you on the screen now is a weekly chart of the JSE Top 40 Spot Index. It goes all the way back to the beginning of this bull market in 2009. And if you have a look at the uptrend line that joins all the lows from the beginning of this bull market, and it's a nice tight-fitting trend line, you can see that we're actually pretty much testing support, and we've been down there. We've tested 41,500, which was the uptrend support on the top 40 index. You can also see from looking at that stochastic oscillator on the top of the chart that the market is very, very oversold on a weekly basis now. So what I'm saying is that, yes, we've had a severe sell-off. It's been ugly. It's been painful. I've had sleepless nights about it. But if we have a look at that big picture chart, there is some support evident around about current levels, which we've tested over the last few days, provided we can hold this support and some stability can come in, then we look okay.
So that's the caveat, though, that if we break below that support line, who knows what could be
well,
next.
then it could be, it could signal further downside.
Yeah.
But if we actually look at this now, and now that's obviously a weekly chart,
Sure.
but let's take a much more shorter term view. And what I've got here now is a chart of the top 40 future and an hourly chart. Now remember, that chart that I just showed you previously was the top 40 spot index. This is now the top 40 future. The future trades currently at around about a 400-point premium to the spot index.
Okay.
This is the December future I'm talking about. So what you can see here is that the market has actually been down to just below 42,000, around about 41,900, which is where we've got long-term uptrend support on the top 40 future. And if you have a look there, there's actually quite a clear inverted head and shoulders pattern panning out. It's not confirmed yet. What we need to see is a confirmation with a break above 42,800. That will then validate this inverted head and shoulders, and that will then give us open a target to the upside, a short-term target of 43,700 on the futures contract. But that could also very well mark a meaningful bottom in our market for now, and we could actually see, I think, if we get some stability here, we could probably see some bargain hunting and some fairly aggressive buying, which might then propel this market up for a nice oversold bounce.
I mean, do you get the sense that there is money that still wants to buy shares that would get sucked in if there were signs that the market is turning?
It's very vague at the moment. There's still, the market still feels undecided as to whether it wants to go higher or lower from here. But we have fallen very hard. We're very oversold. There have been some signs of capitulation. I kind of get the feeling that where we are right now is the dust is busy settling, and provided it can continue to settle, we might maybe see a bit more upside from here if we bounce. But bigger picture, I'm a bit concerned because there's been some fairly meaningful technical damage done on our market as well as some of the international markets as well.
Now, this all plays into what you've called the dreaded option structure.
Yeah.
So, now this was put in place to hedge yourself against a market correction.
Yeah.
However, this is what's caused you sleepless nights.
This is what's caused me sleepless nights, and this is a put spread option structure. I haven't gone into the greater depth and details of it. Viewers who want to see how this thing was constructed, go back and look at the TV show that we did on the 23rd of September. That's when we did this trade. And you can see how the whole thing was constructed then. But basically the payoff that you see over there is how the structure looks. So above 45,000 we have zero cost. Below 45,000 we make money. We make our most money at 43,350, and then that structure starts to lose money below that level. Or what gives back the profit, and then it starts to, the profit actually goes into a loss below 41,700.
Okay.
Now that is all good and well, except that what I did in my wisdom, or not, was that I thought that this was a good hedge strategy. I didn't think the market was going to fall as hard as it has. This has come as a great surprise to me. I went along and I bought one top 40 futures contract against this structure, and I bought that at 45,200.
So you went long of the market?
I went long of the market at that level. Now the thing is, the market's fallen 3,000, just over 3,000 points in a very quick time since then. So where do we stand with this thing right now? Well, at the moment, we're currently on the top 40 future. We're sitting at around 42,700, which is where that orange dotted line is.
Yeah.
So if you actually look at the two elements of this structure now, the actual hedge, the options put spread structure, is making a profit of 20,000 Rand. And that would be awesome if I hadn't have gone and bought a futures contract against this thing. The trouble is that the futures contract that I bought, which is the white dotted line there, that is losing 25,000 Rand. So net, we're actually down 5,000 Rand as things stand on this trade at the moment. And we have been down here towards the left-hand side where we're getting very close and dangerously close to that danger zone. And that's what's been causing me the sleepless nights.
Because I know, I mean, a couple of people actually on Twitter, and in fact I asked you last week, can you only exit this, does it only play out in December? So, what if it does go below that level? Are you stuck in this position?
So to get out of the options is difficult. I can get out of them, but the payoff right now is not as linear as what I've painted it there. That's how the payoff would look at closeout. Currently, because the volatility skew has shifted and there's all sorts of complicated mathematics behind it, I'd be getting out of the option structure at a loss if I had to, as well as the futures contract, I'd be getting out at a loss. So, where to from here? Look, I've got to play good defense. That's the bottom line.
Yeah.
I might look to close that one long futures contract if I need to and just take it on the chin, but I'm going to see. Given what I've shown you in the top 40 graph before this, I think there's there's reason to be said, just let's wait and see, let's try and let the dust settle and let's give it a few more days and watch and see what happens. But at the same time, I also need to play good defense here. I can't just leave this thing open-ended because there's a hell of a lot of downside potential for us if the market were to continue to go lower. In other words, into that danger zone on the left-hand side of that graph.
Presumably then you could buy, maybe take a short position on the market too.
Yes, very difficult to short the market when it's fallen as hard as this and it's as oversold as this. And this is where it gets really, really tricky.
Okay. Garth, so you're not going to do a trade this week, but you are looking at one stock in particular, and it's BHP Billiton, and the resources stocks, of course, they've been all over the place. Yeah. So I don't know where you reckon this one is now.
Well, it's interesting looking at BHP Billiton and interesting looking at the resources sector. By and large, I think we've done very well in the last number of months, in fact, most of this year, to avoid the resources sector. It's been the weakest area of our market, but I also think it's getting to the point where it's just actually too oversold. The weakness that we've seen has gotten to ridiculous levels. And certainly over the last 2 days, I've observed that the resource shares have started to outperform the market. We've seen good buying interest coming in for the likes of Billiton, Anglo's, Kumba, Assor, etc., the shares that are completely bombed out. And I'm wondering whether there's not a possibility that the resources shares are those that take us higher and lead us out of this rally. Resources shares historically have been very strong in the last quarter of the year. And if that is the case, then I think BHP Billiton is the place you want to be. And if I look at the chart of BHP Billiton, it's also interesting from a technical standpoint. This is a weekly chart. It goes back to the lows of 2009. And what you can see, that uptrend line that I've put on the chart there joins all the lows that we've seen since 2009. And currently, this week, we've been reversing up off 290 Rand, which is the long-term uptrend support for BHP Billiton. So what I'm going to be looking for here is a weekly reversal off that uptrend. Provided we get a weekly reversal, then I think it's fairly safe to say that the bottom is in for BHP Billiton and we're likely to see a rally from here. And that's possibly the trade I would be looking at during the week. But obviously keep that in the context that I'm trying to play a hell of a good defense with that option structure that we've got on the other side. Yeah,
I mean, now is not the time necessarily to go out and buy shares willy-nilly that you think are going to bounce in order to make up.
To explain to you what this feels like, it kind of feels like I'm defending against an all-black front row against my try line at the moment. And I'm just really trying to defend as best as I can. It's not exactly attacking time for me right now.
Okay, no drop kicks or anything if I'm going to run with this rugby analogy. Garth, why do you do this to me? Okay, Garth, so what does the portfolio look like then, given the carnage of the last week?
All right, so we've actually come off a lot. I mean, you'll recall last week we were up 42% for the year to date. Now we're only up 32% for the year to date. So we've seen a significant decline in the value of our portfolio. But having said that, look, the overall market is up 2.5% for the year to date. We're up 32.5%. So we're still doing well on a relative basis, if I can try and paint a positive spin on things.
Sure.
But there you can see, there's our option structure. We're theoretically up 20,000 Rand on that, but we're down 25,000 Rand on the futures contract that I bought. Our Bidvest position, don't forget, we've still got that open.
Of course, the Bidvest position.
We didn't discuss that, but it's more or less at break even at the moment, but we have received a dividend there, which is playing into our hands. And then this Life Healthcare, unfortunately, we took a loss of 4,140 Rand there, and we've exited that trade. So that's how our portfolio stands for this week. And obviously that option structure continues to worry me, but I'm going to need to see how I defend against it and play the market carefully in the week ahead. And I'll report back next week.
Yeah, well, hopefully you won't look visibly lacerated. You certainly don't this week. You have kept your composure very, very well, Garth, seasoned trader. And then next courses, which I'm sure people will be very interested in. It always does happen when the market gyrates all over the place.
We won't be discussing option strategies on either of these courses, fortunately. But I've got an Understanding CFDs course on the 23rd of October. That's in the evening. And then on the 15th of November, I've got my last high probability trading course for the year in Johannesburg. So anybody that would like to attend either of these courses, please email me, garth@traderscorner.co.za, and I'll send you the information.
Okay, great. Garth, we'll leave it there. Good luck out there. Thanks, as always, for coming onto the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.